Let me be very clear right from the start. This is no longer a story about a sports recruiting app. What's happening here is a full business model transformation, and most investors haven't caught on yet. Signing Day Sports is in the middle of a business combination that could completely redefine what this company is and what it could become. The deal on the table is a merger with Blockchain Digital Infrastructure, a US based digital infrastructure company built specifically for AI, high performance computing, and data intensive workloads. If this transaction closes and management is guiding for February or March 2026, the combined company will not be a speculative AI idea. It will be an operating cash generating AI infrastructure platform, and that distinction matters. Most AI stocks people chase today don't generate cash, they burn it. Blockchain does the opposite. In 2024 alone, blockchain generated approximately $22.9 million dollars in revenue and $5.7 million dollars in net income. That's real money, real margins, real operations, and this isn't theoretical infrastructure either. Blockchain already operates a 40 megawatt data center facility in South Carolina with expansion plans to 50 megawatts and a roadmap that could eventually scale total capacity up to 200 megawatts over time. That's a potential five-fold increase in data center capacity. Now, here's where this gets interesting. The entire platform is designed around AI ready, high density compute, not legacy hosting, not low power workloads. This is infrastructure meant for AI training, machine learning, and HPC workloads, which are becoming more power intensive every single year. And power is the real bottleneck in AI, not chips, not software, power. Blockchain's strategy is built around securing low cost, reliable electricity in business friendly US states, places with favorable regulatory environments and grid access. That matters more than most investors realize. As AI workloads scale, companies are not just looking for servers, they're looking for where those servers can actually run reliably, cheaply, and at scale. Management is very explicit about this. Power economics, reliability, and location are becoming non negotiable factors in next generation AI infrastructure. That's why this isn't just another AI data center story. It's a power advantaged infrastructure story, and unlike many infrastructure plays, this one is already producing cash flow. Blockchain continued generating meaningful operating cash flow through the first 9 months of 2025 while simultaneously advancing its expansion roadmap. That's operational discipline. Now, let's talk about what this means for Signing Day Sports. Post merger, Signing Day Sports is expected to become a wholly owned subsidiary of the combined company. Translation: the sports app is no longer the core thesis, the AI infrastructure platform becomes the operating foundation. This is effectively a reverse style transformation where a legacy public company becomes the vehicle for a profitable private infrastructure business to access public markets. And that's intentional. Management believes going public will allow blockchain to accelerate growth, improve access to capital, use public equity as currency for acquisitions, scale infrastructure responsibly. This is not a hype driven AI strategy, it's a cash flow first, infrastructure first approach. And that's why this matters in the current AI cycle. We're moving from the model race phase of AI into the infrastructure and deployment phase. That's where returns tend to concentrate. If you zoom out, this platform is positioned across AI hosting, high performance computing, data intensive workloads, modular, scalable data centers, power advantage US locations. And it doesn't stop there. Blockchain also has plans for a 150 megawatt AI and HPC data center campus in Texas with grid interconnectivity targeted for activation in 2027. That's long term optionality layered on top of existing operations. So, what you're really looking at here is a company that already owns operating AI ready infrastructure, generates revenue and net income, has expansion capacity baked in, operates in strategic US markets, is positioning itself for the next wave of AI demand. This is not a moonshot idea, it's an execution story. Of course, there are risks. The transaction still requires shareholder approval, NYSE American listing approval, completion of the S4 process. But the fact that the registration statement has already been filed and amended tells you this is well past the concept stage. This is a closing stage deal, and when deals like this close, perception changes fast. One day the ticker is associated with a neat sports app, the next day it's being discussed as a cash flow positive AI infrastructure platform. Markets reprice those narratives very differently. I'm not telling you this is risk free, it's not. But this is exactly how under the radar AI infrastructure stories tend to surface quietly, structurally, and before the crowd connects the dots. This isn't about flashy AI demos, it's about owning the backbone that AI runs on. And in the AI economy, the backbone often gets paid before everyone else.